Why do you think stablecoins are succeeding so much more than other crypto projects?
If you live in Egypt, Argentina, or Indonesia, it's really hard to get access to dollars. And so stablecoins are a great way to get access to the dollar if you want to save. And I think that's why they have such high appeal.
I'm curious to ask you, by then, where do you think we'll be in the market cycle?
My prediction would be that when we meet in Dubai at Binance Blockchain Week, I think tokenized stocks, whether it's public stocks or even private equity that becomes tokenized, will have progressed a lot on a large enough timescale. There's no doubt that crypto and blockchains will be the future of finance.
Hello, everyone, and welcome back to the Binance Studios. My name is Jessica, and today we are diving into one of the most fascinating parts of the crypto world, on-chain data. And joining me is someone who's built one of the most known platforms in the space for turning blockchain activity into real actionable insight. Alex Svanevik, the CEO of Nansen. And in this interview, it's relevant if you're an investor, builder, or really just curious about what the smart money is doing in crypto. So this is a conversation that you don't want to miss. And Alex, first of all, thank you so much for joining me today. How are you doing?
I'm doing great. Thanks for having me. It's a warm and humid day here in Singapore, but I'm sure it's not as hot as Dubai.
Exactly. It's warm and humid in Dubai too, but that's the beauty of crypto is if you're inside at your laptop, you don't worry about the humidity. It's all fine on chain. Let's start, Alex, because I'm really much looking forward to this conversation and hearing a little bit more about where you and Nansen view the crypto market at the moment. But I'd like to start with a little bit of context into you because I've watched some of your previous interviews and you said you were in AI before AI was cool. So for someone that's new to crypto, can you give an introduction to yourself and also what Nansen does in just a couple of sentences?
Absolutely. Yes, I was indeed in AI before it was cool. I did a degree in AI in Edinburgh, actually. And then I started my first company in 2010, a very long time ago. I spent some years in data science and machine learning. And then in 2017, I fell down the rabbit hole and discovered Ethereum. So I moved from Barcelona to Hong Kong, got my first job in crypto, and realized that people have no clue what's happening on chain. And so I thought, why don't I build a product that helps people understand what is actually happening on a blockchain? At the time, it was mostly Ethereum. Today, we cover, I think, something like 30 different chains. So that was really the motivation to help people get more visibility on what's actually happening on a blockchain.
And thank you for doing that, because I think we constantly put a narrative in crypto of don't trust, verify, and DYOR, and the on-chain data is visible for anyone and open source for you to view. But a lot of us just don't know how to view it and how to dissect it and then turn that into a narrative for where we are in the market cycle. So this is what you're going to help us with today. So for everyone watching, we are going to break down a little bit of the on-chain metrics that you can see on Nansen and then what that means for the crypto market and the cycle as of July 2025. So starting off, looking at the broader market, Alex, where do you think we are in the crypto cycle and what kind of metrics are you looking at to help determine where we are in the crypto cycle?
Yeah, it's a pretty strange time right now because some parts of crypto feel a little bit depressed, almost like not very optimistic. And at the same time, there are some parts of crypto that people are very excited about. For example, the Circle IPO, which was the USDC issuer, which had a lot of interest. And so it's an interesting time right now. It's not clearly super bullish across the board, not super bearish either. And so I kind of prefer those times in the market because it means that there's more opportunities for investors, right? If you just buy everything and it goes up, then maybe that's not so interesting, although it is fun, to be honest. So I look at things like which chains are actually winning, which chains have a lot of activity. And it's been really a story, the last year has been a story of multiple blockchains competing to be the most active blockchain. It used to be Ethereum only. Over the last year, Solana has been really strong. And in the last couple of months, BNB chain has actually been super strong in terms of trading volume and so on. So I look at things like daily active addresses on chains. I look at DEX volume. I look at how much revenues the chains are generating. And you can, of course, find all this in Nansen, our product. for free actually in the chain section. So I think that's a good place to start, to look at the very kind of bird's eye view of different blockchains. And then of course you can go down the rabbit hole of any one of those chains and figure out, what are some narratives that people are excited about, which specific tokens on those chains. But I've been following the kind of multi-chain space a lot over the last few years, and it's cool to see that, it's not clear who's going to win that race.
So as you mentioned, you were early on into getting into Ethereum, and that was your entry into the crypto world. So we're looking at the layer ones. Solana and BNB chain have been growing fast in several different areas. So I'm curious to know why you think the narrative of these chains gaining traction now.
Yeah, I mean, there's one very simple reason, which is that back in, say, 2021, you would have to pay something like $50 to make one transaction on Ethereum, which is kind of outrageous. And so these other chains have just created a user experience that is much lower fees. First of all, it just costs less to use them. Second of all, the transaction times are much shorter, which means that it might take a couple of seconds or less than a second to complete a transaction, whereas on Ethereum, it might take 12 or 13 seconds, which is just not as great of a user experience. And I think also a lot of the infrastructure around the chains have improved, right? Back in the day, Ethereum was the only chain that had really solid wallets, analytics, explorers, and so on. But over the last few years, these other chains have really strengthened on that front. So that means, take Phantom Wallet as an example. It's a hugely popular wallet, and it was built for Solana first. And so I think all those reasons just create, in many cases, a better user experience on non-Ethereum chains. Of course, Ethereum has its own layer 2s like Base, Arbitrum, and so on. But I think overall, the user experience has just become better, frankly, on other chains.
And you mentioned surge in traffic there. And I think one thing that we have to hold accountable for the surge of traffic we saw on Solana, for example, in 2023, and then moving over into 2024 was the surge in interest in meme coins. So I'm curious to ask you now, with meme coins generating over $1 billion for trading platforms, huge retail interest, huge momentum, do you think that we'll see more infrastructure that is built specifically to support this speculative trading that you could say came from the meme coin trend? Or do you think that focus will shift over the next few years?
I think the next big thing is going to be tokenized stocks. And, I'm really excited about this. Not so much for the tokenized public stocks, because you can sort of buy them in, existing stockbrokers and so on. But I'm really excited about what crypto could potentially do to help tokenize what is today private equity or private stocks. And so imagine if you could own a piece of OpenAI, or you can own a piece of SpaceX, right? And Robinhood talked about this very recently at their event, that they're actually going to allow users to do that. And so a big component of allowing for that is tokenization. So I think meme coins are kind of, the example of something that is inherently valueless, but at the same time very fun, as long as you're not losing too much money on them. But stocks are kind of the inverse of that, where they have an actual value, right? As a shareholder in a company, the company, for example, generates revenues, and it might be generating profits, ideally. And that means as a shareholder, you have certain rights associated with that. So I feel like tokenized stocks are almost like a reaction to meme coins, because they represent the exact opposite of them. But they're still appealing to retail investors. And so I think that's the big story for the next months and maybe years. Obviously, Robinhood has announced stuff in this area, Kraken. Hopefully, Binance will announce something too. But I think most of the exchanges are going to get really active when it comes to tokenized stocks. And that's probably the single most compelling narrative for me in the next months, maybe years.
And you mentioned that narratives are a huge indicator of where we are in the market cycle. And I think early on in the interview, you said, the markets are just a little bit almost depressing at the moment, because although we are seeing, Bitcoin over 6 figures, we are seeing the market look fairly calm and sentiment seems fairly neutral. So I think the next question is, one of the products that we are seeing surge in volume and interest and being discussed quite extensively is stablecoins. So why do you think stablecoins are succeeding so much more than other crypto projects at the moment? For those that are new to crypto and just wondering, why do people care so much?
Yeah. I mean, I've been a fan of stablecoins from the very beginning, like using Tether back in 2018, I guess 2017. And also, I remember looking on chain and making charts from our data in, I think it was 2019 when Circle launched USDC, and it had just a few hundred, addresses holding it. And it's interesting because they're the most boring product ever, if you think about it. It's just $1 on a blockchain. But at the same time, they're arguably the most successful blockchain application, right? So I think maybe one thing that is perhaps not obvious to everyone is, why do stablecoins exist? Or put differently, why should a company issue a stablecoin? Like, what's in it for them? But the way it works is essentially that if you have a lot of dollars that are parked with, say, Circle, and then Circle issues out USDC in exchange for those, the underlying dollars can be used to generate interest or yields, right? They could buy T-bills, they could put them into deposit accounts that generate an interest. And so if you have $100 million worth of this sitting in an account and you're generating, let's say, 4% of that, that's $4 million in revenues. And so now you scale that up to Circle, which has 62 billion issued at the moment. And I think Tether has almost 160 billion. The revenues become very, very large. And so these are, some of the most profitable businesses in crypto. And I think Tether might be the most profitable company on earth per head count. I think there's something like 100 people in the company. And they generate billions of dollars. And so, they're a very fascinating business construct for that reason. But I think for users, it's important to realize that if you might live in the US or you live, in Europe, and you take sort of banking access and maybe even access to the US dollar for granted. But the reality is, if you live in Egypt or Argentina or Indonesia, it's really hard to get access to dollars. And so stablecoins are a great way to get access to the dollar if you want to save in dollars. And I think that's why they have such high appeal, that they're just a fantastic way to kind of export the dollar to any investor or any kind of saver around the world who prefers that to maybe their local currency. So yeah, and on the one hand, they're super boring, and on the other hand, it's a really fascinating product, actually.
Absolutely. I just come back from Bhutan yesterday, and it's
fascinating. I met the king twice, actually. Yeah.
Oh, amazing. Yes. Well, they've just rolled out Binance Pay, so they're accepting stablecoins now as a form of payment. And one of the things that we often talk about in crypto is the strength of stablecoins, the ability to hold US dollar denominated stablecoins on chain that you can transact easily. And constantly when I'm explaining to people, like my mother in the UK, for example, it's always harder to sell it to her as someone that is used to a currency that's fairly strong. But if you're used to smaller, more emerging currencies, the people on the ground there, Binance Pay has been rolled out to 1,000 merchants already. They just get it. They just really understand the strength of holding it stabled and what it can mean for kind of cross-border payments for them, for their business, for accepting tourism. And it's really remarkable to see. And I think the landscape's going to change significantly in the next few years.
Yeah, man, I'm really jealous that you went to Bhutan. I've been wanting to go there for a while. I've heard the landing on the airport is not the most pleasant, but I really want to go there. And I've been following the King of Bhutan's project to create a new city, which we could probably spend hours talking about. But it's a really fascinating place, and they seem to be leaning into crypto a lot there, which is awesome.
Remarkable how they keep culture so intact, but then also they're so progressive with digital assets and innovation. I absolutely recommend it. I'll send you a full itinerary of places to go and think.
Amazing. Because thank you.
Once in a lifetime trip. Okay, so we discussed stablecoins. We've also touched on the kind of meme coin mania of 2023 and 4. I'd now like to move over into the more typical crypto market, which is Bitcoin and altcoins, because there is a recurring conversation at the moment, which is, if you're on CryptoX, you'll see the phrase "when altcoin season." So maybe I can start and ask you first of all, the Bitcoin dominance. Bitcoin at the moment is an asset class, July 2025. How are you viewing Bitcoin's performance? And then we'll touch on altcoin season a little bit later.
Yeah, I think Bitcoin has reached escape velocity in the sense that it's past the point where it might go to zero. I think it'll now never go to zero. And because it'll never go to zero, that creates this kind of reflective or reflexive mechanism where there's always going to be a buyer. And it turns out that Michael Saylor maybe is the hungriest buyer out there who's been accumulating Bitcoin very aggressively. And that creates kind of a perpetual demand for it. And then now we're seeing other companies that are kind of almost emulating what he's been doing, creating what we call digital assets treasury companies, where you might do a reverse listing on a stock exchange, and then now the only purpose of that company is to acquire Bitcoin, right? And you've been seeing you can see this with some of the other so-called altcoins like ETH and Sol as well. But I think this is a really interesting trend, and you can almost think of these alternative companies that are buying, say, Bitcoin as kind of just riding. They're sort of like little fish, on the back of the Michael Saylor whale, and it's kind of just following in his trail. And it does feel like, as long as, I mean, this is kind of a basic realization of Bitcoin, but as long as people will be printing fiat money, the Bitcoin price on a long enough timescale is just going to go up, right? It's kind of the escape valve for money printing, and also governments taking on too much debt and running too large deficits. So I think it's very hard to not be bullish on Bitcoin. Like I say that as someone who's very much kind of a multi-coiner, right? Like someone who believes in lots of different chains, lots of different tokenized assets. But Bitcoin is it's in a category of its own. It has a monopoly on that category, right? And so when we talk about altcoins, it's a different story, because all of these, alternative assets have to compete with each other. And it's kind of a bloodbath, right? If you don't have enough capital flowing into that part of the market, it's not going to do very well in terms of price action. And I think it's the one thing that's challenging when you think about, alternative blockchains or smart contract platforms, is that while Bitcoin doesn't have to have the best tech, it just needs to be incredibly robust and secure. All the other blockchains basically have to compete to also have great technology, right? And I think that's kind of the story of Ethereum over the last few years, that at some point Ethereum was kind of an uncompetitive technology, which created an opening for chains like Solana and BNB chain, right? And so I think it's a much harder category to invest in. And my general sense is that you're probably better off buying a broad basket of the top layer one assets than trying to pick any one of them. Right? You should probably own a little bit of ETH, a little bit of Sol, a little bit of BNB, a little bit of, Hype, Sui, etc. That's not investment advice. Obviously, people should, do their own research. But it's hard to predict which chain is going to win. I do think that the layer one category is a category that makes sense from a tokenization perspective. If we kind of go down the list on, say, CoinGecko or even on Nansen and our rankings, you find a lot of tokens that probably don't make any sense, and they shouldn't exist in the first place, right? If we're being totally honest. But layer one assets, I think, do make sense. They have a purpose for the security of the network, for paying transaction fees, and so on and so forth. So, but yeah, I do think Bitcoin is just in its own category. It has a monopoly on what it is, and it'll probably never go to zero.
That's good to hear. This interview and this timestamp will not end up on the Bitcoin obituaries as a Bitcoin is dead going to zero state plus destiny, which is an opposite to hear. So then the altcoin performance that we are expecting to see, do you think that it is still structurally tied to Bitcoin dominance, or have we seen a new market maturity for some degree of a decoupling? Because typically, in crypto, people say, the money will rotate out of Bitcoin into alts, and that's when altcoin season, which is the answer to everyone's question, not financial advice, but what are your thoughts?
Yeah, I mean, empirically, you have seen a decoupling, right? It's like if you look at altcoins and you look at Bitcoin performance, say over the last year, it's clearly a decoupling, and I think there are two very basic reasons for it. The first reason is that the buyer of Bitcoin, let's say the marginal buyer of Bitcoin, is not necessarily the marginal buyer of the altcoins. Like Michael Saylor is a great example. He only buys Bitcoin. And I think a lot of the TradFi money similarly will only buy Bitcoin, right? So that's really important. Like the demand, on the demand side, there's this new category of, extremely well capitalized buyers who will only buy Bitcoin, right? So there's no spillover from Saylor in that sense into altcoins. I think the other reason is that historically, altcoins have been priced in Bitcoin, right, on exchanges. But going back to your earlier question about stablecoins, now they're mostly denoted in stablecoins. In other words, if Bitcoin goes up, it doesn't automatically mean that mechanically mean that these other prices go up just because that's how the markets are created, right? It means that they've already decoupled through how exchanges list these assets, namely in stablecoins, instead of listing them against Bitcoin. That's not a very new thing. Like that happened probably a couple of years ago, but gradually. But if a new coin lists on, say, Binance today, sure, there might be a Bitcoin base pair as well, but mostly there's going to be a stable coin denoted market that people are trading. So I think those are two very basic reasons why there have been decoupling. Like the net new marginal new buyer that represents a huge amount of capital, let's say sort of exemplified with Michael Saylor, only buys Bitcoin. And then the structural mechanics of the exchanges where you have stablecoin denoted markets instead of Bitcoin markets is probably the other reason.
And it seems like they're slightly in a league of their own. So we clarify, I think the institutional trend and kind of Bitcoin on balance sheet is just a huge, monumental surge in interest that we can't ignore. And then if we do take a look at the altcoin interest, particularly in the layer ones, I think that's a fascinating conversation on its own. And for those that have been in the crypto market for some years, you have witnessed the changing trends of different layer ones really driving momentum. I'm curious to hear what you think and the Nansen metrics are showing now when it comes to layer ones that are showing more interest and traffic. You mentioned Hyperliquid there, and that was definitely talked about over the last quarter. So what's your take on the layer one landscape in terms of competitive nature, and are there any metrics that are surprising you at the moment?
Oh yeah, it's super competitive, and it makes it way more exciting to follow all the data around it, right? I mean, just think of revenues. I think this is maybe surprising to some people, but if you just look at the last 7 days, the top 2 chains that generate the most revenues are actually Tron, which is most known as the Tether chain, which is the top stablecoin. So when people transact Tether in, say, Argentina or India or Indonesia, they might be using Tether on Tron. So Tron generates a lot of revenues just from usage of the chain. The second one is Solana, actually. And Solana is slightly above Ethereum, which is number 3. And then Bitcoin is number 4. And then BNB chain is number 5. So I think, when you look at these different chains, revenues is a very interesting metric because it is hard to fake, frankly. Like you can sort of create inorganic activity of active addresses, even transactions, especially for the very low fee chains. But it's much harder to fake revenues because you're actually paying the network to make those transactions, right? So that's why I think revenue is probably the single best metric, in my view, when you judge which chains are doing best. But you can also look at other things, right? You can look at, there's different ways to think about security, for example. And these are mostly proof of stake chains. And what that means is that you stake the native asset, and there are validators that run the network, And you could argue, although people have debated this, that the more of the native asset is staked, the more secure the chain is, right? That's another way to think about it. And Ethereum and Solana are the two by far highest staked market cap chains. You could also look at stablecoin issuance, like we talked about earlier, where actually Tron and Ethereum are way ahead, but Solana is also catching up a little bit. And you can look at things like TVL, total value locked, in DeFi protocols. You could look at things like, obviously, daily active addresses and transactions. So there's a lot of stuff you could look at. And what I would say is there is no one chain that is clearly winning. It's actually super competitive. And if you asked me this question 3 years ago, 4 years ago, I would have said, the only game in town is Ethereum. But that's not the case in 2025. It's really Tron, Solana, Ethereum, Bitcoin, BNB Chain, Ton, Base, Arbitrum, BitLayer, of course, Hyperliquid. There's tons of chains actually out there. And I think this is healthy for consumers, for investors who, at the end of the day, just want the best infrastructure and the best products, and of course, the best assets to trade on those chains. But yeah, it's also worth remembering that this is a very young industry, right? And nothing is certain yet. And it's not clear who are going to become the winners, whether it's chains, whether it's DeFi protocols, whether it's top tokens that are traded, etc. So I think it's a pretty fun time actually to be monitoring what's happening in crypto.
It's certainly an exciting time. So final point then. So you will be speaking at Binance Blockchain Week this December, and we're thrilled to have you speak. I'm curious to ask you, by then, where do you think we'll be in the market cycle, and what kind of tone or energy are you expecting on stage based on possible trends that could emerge at the time?
Yeah, I think sometimes I've wondered, it could be that you have a bit of a new cohort in terms of people who are both interested in crypto and who are invested in crypto, and maybe kind of the degens who were active in, say, either 2017 or 2020 or even earlier. Maybe that they are not the folks who are going to end up being the winners like in the next couple of years. And so a good example here is the narrative of tokenized stocks. So my prediction would be that when we meet in Dubai and we are at Binance Blockchain Week, I think tokenized stocks, whether it's public stocks or even private equity that becomes tokenized, will have progressed a lot. And I think it's just such an amazingly large opportunity for crypto. And it makes so much more sense to settle transactions in stocks on a blockchain than on some T+1, +2, +3 system, right? That's legacy and outdated. And so I think that's probably the big one. And I hope that there's going to be a lot of optimism and excitement around tokenized stocks and hopefully other tokenized real world assets eventually, because we have to keep in mind that crypto is a tiny asset class at the moment. Even Bitcoin is small, right? But if you look at, the broader space, it's a tiny fraction of all the assets that exist in the world. And my view is that in the next years, every asset will become tokenized. And that means that the combined value of all assets on blockchains are going to go 1,000x and beyond, right? So whether it's, going to be super exciting already in Q4 or in December this year, I think that remains to be seen. But on a large enough timescale, there's no doubt that crypto and blockchains will be the future of finance.
Excellent. Well, thank you so much for joining us today. And we can't wait to see you at Binance Blockchain Week in December as well. And we'll have to hold you to that and see how the market is faring. But Alex, thank you so much for your time today. It was great to hear your insights. And we'll also leave the link to your socials in the description for anyone that does want to hear more. So thank you.
Thank you so much for having me.
Well, that's all from myself and Alex, but we hope you found the interview useful. If you have not already, do make sure to like and subscribe to the channel so you don't miss the next one. Also, as Alex mentioned, he will be speaking at Binance Blockchain Week along with a batch of fantastic industry speakers and voices. The link to buy tickets is down in the description. So we hope to see you all in December in Dubai.